All right, some live action here. Live action on Facebook and YouTube. Happy Thanksgiving. Happy holidays to everybody. Just wanted to give you a quick update here as we have kind of a slow day in the mortgage world. Markets are closed. Lock desks are closed now. So getting some stuff done today. Definitely available if people have questions, specifically about mortgage rates. So it's actually very quick and easy to figure out what kind of mortgage rate you pre-qualify for. Pre-approved is a different story, right? Getting your income documents and making sure everything looks good according to the pre-qualification. But it's very easy for me to tell you what kind of mortgage rate you can get. So first and foremost, if you're curious, hey, what kind of rate could I get? Credit score, how much you owe, how much your home is worth. These are some simple things. If you have a VA loan, all I need to know is your credit score and how much you owe. That's it. We can quote you. So what I do want to do here is I want to take you through what kind of is going on from just a mortgage rate perspective. So we had this channel. These are mortgage bonds, right? So here's the channel that we've been in for quite some time now. This little channel has been pretty consistent. It's very, very good for us. Remember, the all-time highs are just up here. So the all-time highs are not far away from mortgage bonds. And remember, when mortgage bonds go up, mortgage rates go down. So bond prices go up, mortgage rates go down. So we want prices here to go higher. That's what we're looking for. If we want lower mortgage rates, we want mortgage bond prices to go higher. And that's what we've been seeing. We had some, this is kind of, the one recency, and these, by the way, these candlesticks are each 1 day. So you can count these back. Here's today right here. We're up 25 basis points today. I wanted to make this video yesterday, the day before, but didn't get the time to do it. And you can see there was an opportunity here. We're in a range where it looked like, okay, it could go anywhere. My prediction was higher. Why? Mostly because of this. You see where this little support is right here from our most recent trend. So this is our last 1, 2, 3, 4, 5, 6, 7, 8 days of mortgage bond trading. Notice how there's a kind of a floor that's been set here. Now notice a couple things about this floor. First of all, this floor is very close to our old ceiling. And this is very typical in technical analysis where you'll see, hey, this previous resistance point is now become a support point over here. And this is also very close to where we saw this gap up take place. You see the gap up support level and the gap down resistance level right on that same number. So this is why I was pretty bullish on Wednesday as to rates going back. Now, you never know what can happen, right? So everything I'm going to tell you here, anything could happen. Rates could go up or they could go down. I just want to show you the numbers, show you what I'm thinking, show you what's going on, and most importantly, let people know that it's very easy and quick to find out what kind of rate you might qualify for refinance. If you want to call or send me a message, I can tell you very quickly. If I don't think I'll have the best product for you, I'll refer you to someone who does. We'll make sure that you're taken care of, you get the best deal possible. So when you look at this, you kind of see this makes you feel pretty optimistic. And this is why when we closed right down here on Wednesday, I thought, well, you know what? Even though we got a lock alert, now that's Barry Abebe, who provides this information. He said, hey, let's lock it here. And we did lock some loans on Wednesday. I had a feeling this is what we would see. And we've got 25 basis points today in a shortened day. So huge up day, very, very good sign for interest rates getting closer, to that all-time high. So when we look at this, we tend to say, all right, well, even though we're at a resistance level now, this looks very good. This looks like we've established a new floor of support. It looks like we've got some momentum to the upside. And here's where the stock market comes into it. Okay. So this is putting the whole puzzle together. In a balanced and what we would call a predictable market or a healthy market, stocks going up should cause bonds to go down and vice versa. Okay, so they should be operating separately. Now, in a particular market like this, we've seen that the bond market and the stock market have been in lockstep on some days, and that's been a little bit puzzling. But what we can look at here macro, you see here's the COVID crash, right? That's what that is right there. So this is going back, this is March, February, and then the beginning of the year. And this takes us all the way to today where we're up here, closing almost at 30,000, but not at 30,000. Big number, very, very important. You see the intraday high, 30,116 for the Dow is an all-time record high. And that happened recently. So if we look here back at our previous high before the COVID crash, and we sort of just extrapolate where that goes, we touched it again here, it appears that we also have a new floor of support over here on stocks. Now, in my experience, when both the stock market and the bond market are showing the same thing, which is what I just showed you. Almost the exact same thing's happening. When they're both showing you the same thing, one of them is lying. And it's usually the stock market. Now, my friends who are in love with stocks are going to blast me for this, but I do think it's time for a pullback in stocks. I do think after the Santa Claus rally, probably in January, possibly before, I think the election will, I think that the incoming sell orders might be pending the election. That might be the buy the rumor, sell the news trade. When that comes, this should help mortgage rates. So if I'm correct, which I could totally be wrong, but if I'm correct and the stock market's lying here, because both the bond market and the stock market are showing technical signs to go higher, and that's not really likely, if stocks do go down, that will only help the bond market. So if the bond market is already positioned to go higher and we get some help from stocks, I wonder if I can draw on my own face here. Can I draw? Yeah, oh yeah, hey, look at that. Just figured something out. Let me give myself a mustache. So if we can, sorry. So if we can get that and we can continue to see this trend, here, which you can draw trend lines however you want. Here was the previous trend, right? It broke. Now you kind of draw it here. You could also draw it here and say it's more like that. But either way, it's higher. I don't care what you're doing. You're going to see it's higher. We've hit this ceiling a few times for sure, and we're right there again. But we're knocking on the door is what that's called. And usually you get let in on the third or fourth time knocking on the door. Well, let's look. This is 1, 2, and now we're knocking on the door for the third time. So will we get through this time? Probably not. But if we don't, and we have a fourth instance, we probably will. So I think stocks going lower, which I do predict will take place in the next 4 to 6 weeks. We're going to see a pretty big pullback in stocks. When that comes, it could provide enough money flowing out of stocks into bonds to see even lower mortgage rates. This is possible. Now, will it happen all of a sudden? Will we just one day wake up to 1% mortgages? No, it's not going to happen all of a sudden. It's going to happen very slowly, because even if, for example, bonds do have a big up day like they did here, or a big down day like they did here, or a huge gap up like they did here, most banks aren't going to knee-jerk react to that. Most banks are not going to go, oh, let's move the rate sheet a huge. No, they'll move a little bit and they'll wait and see. Because remember, it's the mortgage game is a very slow-moving thing. Mortgage bonds, a very slow-moving thing. There's not a lot of knee-jerk going on there like in the stock market. So in order to get mortgage rates to go lower and to get into the ones, which everyone's asking me about, will they get to the ones? Could they get to the ones? They could. They could also go right back into the 3s or the 4s just as easily. However, now that we have the Fed buying coupons in the ones, they're buying 1.5%, 1.75% coupons. There's an issuance out there. We could see mortgage rates go even lower. And if stocks will cooperate and go lower, don't bet against the stock market. We don't ever do that. But it does need to come in. It does need to come in a little bit. If it does, then we will be in a great position to see even lower mortgage rates. So, happy Thanksgiving message to you is this. If you are waiting on a refi, if you are not eligible yet for one, you may get lucky here. Hopefully you'll get lucky. Anything could happen. Rates can go up much quicker than they can go down. That's one thing I've learned. Rates can go much, much higher very quickly versus they don't go lower like that. So if a bank or if banks in general perceive some sort of risk in the marketplace from between today and tomorrow, they can raise their rates no problem. No problem. And they will. They will if they believe that that's the case. As far as going down is concerned, they're more careful about that. Why is that? Is it because they're greedy? Is it because they're jerks? No. The reason why it happens that way is because, remember, when a mortgage company takes your lock, when I lock your loan, and by the way, I can give you a quote on a refinance or a purchase. If you have a VA loan or you're wanting to get a VA loan, I can beat everybody. And I mean from a cost and from a rate standpoint, everybody. We can do that quote very quickly. Just give me a call, shoot me a text, shoot me an email. I'll tell you what the quote is. And when we quote that, and then let's say you have a VA loan, and we go ahead and we lock your loan on Monday. Well, the loan is locked based on today's rates. The bank is not going to actually sell that loan. They're not even going to be in a position to sell that loan for many months. 2, 3, 4, 5 months, 6 months maybe. So they have to hedge in the meantime, meaning that they have to play the other side of it to try to hedge their risks. And there's risks involved in hedging as well, but the risks are less than just being flapping in the wind. So they have things that they have to balance and manage. And if there's a big expectation of something going the wrong way, they'll price that in. They'll bake it into the cake and protect themselves in that regard. So it's not a greedy thing. It's just a smart business move if you believe there's something risky at play. That's the reason why mortgage rates can go up very quickly, but they usually don't go down with quite the same trajectory. Now, heading into the holiday season, you're going to see a lot lower volume. Typically, we see lower volume in the quantities and just the absolute shares that are traded for stocks. You're going to see lower volume for bonds. We don't know. We'll see, but that's very much common for stocks. And whether the money will flow appropriately or not, whether people will, as they say in the poker world, go south, put their money in their pocket, put it in the bank, and say, you know what, we're going to let these things play out. We need to get past January 20th. We need to see who the next president is actually going to be. If that's the case, then things could change. Things could change, and I'll keep you posted if that's the case. But it's a very, very interesting time, and I do think that we are set up for success for 2021. Either way, even if all of these things I'm talking about happen slowly, and it's a trickle, if they happen, we're going to be set up for another booming year in 2021 for not only San Diego real estate, for nationwide real estate, which is hard to imagine given what we've gone through economically in the past year. But that is the way it's setting up. So, happy Thanksgiving to everybody. I hope this is helpful to you. Share this with your friends if you want to make them smarter than everyone else, and I'll see you all soon.